Yo, what's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. So before we get started, be sure to subscribe to the YouTube channel, hit that bell notification icon to be updated whenever I upload a new video, and hit that thumbs up if you enjoy the gems that are going to be dropped in today's video. Today we're going to be discussing a little bit about entry, risk management, how I manage an active trade. Okay, we're going to use this trade here as an example. How I set my counter trend targets, and then how I set my pro trend targets. So I'm not going to go into mentorship detail with the targets, but I am going to give you guys an easy, quick tips and trick to help you all out with counter trends. A lot of you guys have been DMing me asking me how do I maintain trades to hit these numbers here, as well as some of you guys have been contacting me saying that you do trade smart money concepts, you aren't a student of mine, but you are having trouble with setting your targets, like price is not hitting your targets, stopping you out, things like that. So we're going to discuss all of those little minute details to assist you all with your trading. Enjoy the video. Peace. All right, so let's get right into it. So the first thing we're going to be talking about is entry. You guys probably remember me dropping a video where I was currently in this trade. I think we were somewhere here within this area, or maybe we were here within this area. I can't quite remember, but we didn't hit full TP yet, and I told you guys I would update you all when we did hit full TP. So indeed, price did come down to our entry, tapped us in, and we had a nice push to the upside, risking around 3.5 pips and targeting 66.8 pips. Now, before we hop into it, if you're someone who wants to produce these types of results, all of my secrets, all of my gems, how I do everything that I do on the charts that you guys have been witnessing over the past few months consistently every single day, all of that information on how you can do the same thing is within this institutional trading course here. All right, literally just finished it. If you do sign up, please use Liquidity 25 in order to get 25% off. Okay, you do not have to pay full price. I've talked to my team. I actually wanted to give you guys closer to around 30 to 40% off, but I do not make all the decisions. My team said that 25% was a good number. So please use this. In 3 days it does end, but I want all of you guys to take advantage of the 25% off. All right, so don't pay full price. Use the 25% off. Get your hands on the course and enjoy all the content. It's over 31 lessons, 31 videos, and there are over 5.5 hours worth of content total. So go check it out. Let me know what you guys think. So talking about entries, one thing that you want to make sure is that your entries are spot on. Okay, what do I mean by that? When you are selecting an entry, you really want it to be where price comes down to your entry and then rejects off of it. How I set my entries are within the course, okay, within chapter 7. Okay, it's a very long video, but it overall is going to go over exactly how I do what I do with my entry method. All right, entries are going to be important because they're going to give you a tight stop loss. All right, your stop loss should not be more than 5 pips on average. Okay, now you will have some pairs or some trades where, in this case, with this trade here, my stop loss was around 10 pips. It will happen like that sometimes. Okay, but on average, your stop loss should be anywhere between 2 to 5 pips. Okay, if you can get your stop loss between 2 to 5 pips, then you're always going to have a very good chance of having a 10%, 12%, 15% gain on average. All right, so in this case right here, entry was spot on. That's first. All right, second is risk management. How am I going to manage my risk? What am I going to do when price starts to flow into my direction and I still have risk on the table? So before we get into that aspect of risk management, I do want to talk about percentage risk. What percentage of your account are you risking per trade? That should be a question that you're asking yourself. Me personally, I stick around 1%. All right, 1% to me is plenty to risk on a trade. You don't need to risk, especially when you're doing numbers like these with proper entries, right? Risking 1% on this trade still provided 19%. That means that I could take 19 losses and this one trade would have made up for all 19 of those losses. Okay, that's how you want your risk management to be set up, right? You only want to be risking a small amount of your account per trade. Okay, a small percentage of your account per trade. Now, those of you who don't like to risk percentages, you can decide to risk monetary value. So if you just want to risk $100 per trade, $200 per trade, that's completely fine, regardless of the risk percentage behind it. That's completely fine. But I would suggest you all really pay attention to percentage and when it comes to risk, instead of looking at like pips, dollar sign, things like that. Sorry, you guys probably heard my door close behind me. But instead of looking at dollar sign and pips, I would pay attention to percentages for risk. All right. Now, how do I get risk off the table? All right. When do I get risk off the table? One thing about my trading, I never move my stop loss. All right. My stop loss stays exactly where it is the entirety of the trade. Why does it do that? Well, because my stop loss is always going to be my invalidation zone. Okay. If price closes below my stop loss zone, okay, my stop loss area, then more than likely it's going to be an invalid trade setup. Okay, and I hope you guys are taking notes because these are gems that I run through with my mentorship students. So, I mean, it's nothing major that's within the course that I'm going over right now, but these are little gems that will assist you. Now, once you tap into the course, you know, especially this risk management video here, it's going to turn you up, but that's for a later time. So, when do I get risk off the table? I always get risk off the table when I am 1 to 4 in profit. Now you can choose 1 to 4 or 1 to 5. When you're 1% or when you're 4% in profit or when you're 5% in profit, that is when I decide to close 1% of the trade. So if I'm risking 1% on this trade and I close 1% at 1 to 4, which is 4% in profit, then I'm up 3%, but since I've closed 1%, I'm now risk-free on this trade, which means that price can come take me out, okay, and I still, I'm still good. I'm still break even on this trade setup. Okay, now why do I leave my stop loss where it is? Well, the reason being is because, so let's say price pushes up here, this is 1 to 4, with these two candlesticks. Price then pushes to the downside here. Depending on what server you have, if you were to move your stop loss to break even, you could have possibly gotten taken out here. All right, depending on what broker you use, things like that. Okay, I do not like to move my stop loss. My invalidation zone is here. If price closes below this area here, then I know that, my overall entry idea was wrong, and I would be looking for price to tap into this apex here. Okay, but just because I'm 1 to 4 in profit, I can take 1% off the table, but if I leave my stop loss where it is, I have a higher probability of allowing this trade to play out, giving it a chance to actually run, as you guys can see here. All right. So when I'm at 1 to 4, I close 1% or 1R, and I leave my stop loss where it is. Now let's talk about counter trend targets. So here, this was a counter trend move here. This was also a counter trend move here. As you guys can see, both of these counter trend moves, I did not target swing highs for these counter trend moves. It just didn't make sense to target swing highs. If you're counter trend, I want you guys to focus on targeting 72. That would have increased to 7.2. Okay, not bad. I want you guys to focus on targeting your zones when you are counter trend. So if I'm buying off of demand and I'm counter trend, I'm going to target the next supply zone. Same thing here. I was buying off of demand here, entry took place here. I'm going to target my supply zone here. All right, I'm not going to target highs and lows when it comes to counter trend. I'm simply going to target the next zone itself. Okay, this is going to be very, very important. Why is this going to be important? Well, when you're a counter trend, you're not anticipating a move taking out a high because you're simply counter trend. So that high is supposed to be strong, okay? And wherever you're coming off of is supposed to be weak, which means wherever you're coming off of, you're expecting it to be run in the future like price was run here, over here, right? So with those ideas in mind, and if you haven't checked out weak versus strong highs, feel free to go check out that video. It will explain to you, like, basically just use that video's concept when you're counter trend trading, weak versus strong highs and lows, right? So if we have a counter trend trade, we're not going to be targeting a strong high because that strong high is going to be responsible for taking out my weak low, which is here, right? So with those ideas in mind, when you are counter trend trading, target your next zone. Now, when you're pro trend trading, for this example here, I did call this out to my clients, a part of the Telegram channel. Now, I'm not going to count this as a trade because we didn't get our M15 entry model, okay? Yet, we did have students that were able to take advantage of this trade, so congrats to those students. I did have someone who I introduced the course to a little early. He took the course, and he was also able to capitalize off of this move here using the information within the course. Very tight stop loss, very large risk to reward. Okay, in this case, right, you could have targeted this swing low here. This would have been around 9.7%, but you could have also decided to target this fishnet of lows here, or what's resting right below, which is this demand here, right? That pro trend trades are a little easier to actually flow with, okay? With pro trend trades, you can easily target a collective group of equal lows, swing lows, demand or supply that's coming up, right? You have a lot more options. When it comes to counter trend trading, simply just target the next zone, all right? So in this video, we went over some entry gems, risk management gems, how I manage my risk when I am in profit, counter trend targets, and pro trend targets, all right? Just a little bit of information to assist you all based on all of the questions that I've been receiving within my Telegram channel, within my DMs, all right? If you guys do have any questions, as always, feel free to contact me. Check out the course. It will be the first link in the description. If you're someone who wants to turn your trading up, if you're someone who wants to become more efficient and more effective with smart money concepts, the institutional trading course is going to be for you. I'll catch you guys on the next video. Peace out.